This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Surprisingly strong retail sales grew at the fastest pace in more than a year. So why are so many traditional stores stuck in the mud?
Billion-dollar bet why Apple decided to make a sizable investment in one of Uber's biggest rivals.
How I made my millions. No, not me. Our newest series introduces you to a serial entrepreneur who made a special sponge and is now soaking up success. Those stories and more tonight on Nightly Business Report for Friday, May 13th.
Good evening, everybody. Welcome. A triple-digit decline on this Friday the 13th. But the week, filled with retail angst, didn't end as it began. Today, we learned that retail sales were robust last month. According to the latest government data, consumers spent more in April than expected. And that's important because consumer spending is responsible for about 2/3 of economic output. But it flies in the face of everything that we've heard this week from some of the nation's biggest retailers who are struggling to attract shoppers and grow revenue. JCPenney was the latest to report an unexpected sales drop and cut its gross margin guidance for the year. Steve Leisman looks at the possible reasons behind the disconnect.
A strong national retail sales report for April gave a major boost to the idea that the U.S. economy is in the early stages of a rebound from that weak first quarter. Retail sales grew 1.3%, beating estimates with strength in auto sales and even furniture. Economists now looking for about 2.5% overall economic growth in the second quarter. But the number raised a troubling question. Why have retail earnings been so lousy? Nordstrom said comparable sales fell 1.7%, and Kohl's saw them dip 4% for the most recent quarter. Macy's registered a decline of nearly 6%. Theories abound. At the top of the list, internet retailers eating the lunch of the department stores. Year over year, online sales are up double digits compared to no growth at department stores.
The retailer's got to pick up his game. He's got to really make, and the mall owner's got to create activities in the mall, like a hotel, to pull people into the property and do stuff that you can't do online.
But the online growth trend has been around for years. Odd that anyone should be surprised by it. Others suggest the election undermining consumer confidence.
We think it's election related. There's a lot of people who are not happy on either side with the presumptive nominees, right? However, and the consumer's voting.
Working against that idea, consumer sentiment surged in May unexpectedly. And how much confidence can consumers lack if they're back to the lots buying cars? We know this. Job growth has been pretty solid, and wages are even rising now, up about 2.5% year over year. Gas prices, they're up a bit, but still low. Stock prices, they've rebounded, and home values continue to rise modestly. Consumers have the means to spend if they want to.
People are spending, but what are they spending it on? They're spending it on about an experience. They're spending it on something with a sense of entertainment, social activity.
For now, the retail mystery remains unsolved. Consumers, they're spending, but investors, they're trying to figure out in whose cash register the money is ending up. For Nightly Business Report, I'm Steve Leisman.
So where and what are consumers buying with their money? Jan Niffen, the CEO of the retail consultant firm J. Rogers Niffen Worldwide, joins us now. Jan, welcome. Good to have you with us. My sense is that in that package, we get an idea of where the money is going. They're spending on cars, they're spending on stuff at Home Depot, and they're spending on experiences. But they're not going to JCPenney or Macy's or Nordstrom's.
That's for sure. We're not seeing them turn out in the full-price mainline stores. We're seeing continued growth in fast fashion. We're seeing continued growth in the off-price sector. We're seeing continued growth in online. Let's read that as Amazon. We are not seeing growth in the traditional brick-and-mortar, full-price, mall-based retail space.
You say you've seen this movie before. How do you think the sequel, if we're living it right now, is going to turn out?
Well, these guys aren't going away, right? I mean, Macy's is a big, healthy company. They're going to monetize their real estate. They'll get better at what they do. They'll shrink the store base. They'll do more omni-channel retailing. My concern is not, are they still going to be here? Even Penny's is still going to be here, even given the tough time they went through. It's really a question of what do these stores look like going forward, and what does the ROI on their investments look like? The problem I see is every time Macy takes a sale out of the store and puts it online, the ROI goes down. Every time a vendor takes a sale out of the Macy's or another department store and sells it themselves direct to the consumer, they sell it at retail and their ROI goes up. So we're seeing the vendors doing more and more direct to the consumer, and we're seeing more and more vendors selling to off-price, and we're seeing a lot of price compression.
I infer from that then, Jan, that maybe if I want to make a buck here on retail, I might be better investing in some of the retail manufacturers who are selling direct or have their brands, whether it's a Polo Ralph Lauren, a Coach maybe, a Michael Kors. Am I right on that?
Well, you're in my bailiwick here. I really like Ralph Lauren. I like PVH. I like VF. I like Columbia. I like Hanes Brands because those are vendors. I think they're going to do better in the back half of the year than the retailers. I think they're going to do some disintermediation and sell more themselves. So I like that space. You also mentioned something else I like. I like strong brands that have a real serious presence in the mind of consumer. Kate Spade is a good example. Their mind share is a lot bigger than their business. You said Michael Kors. I'm not a fan of Kors. I think they're on the downside now, but I like Coach's resurgence, so I like them. And I also like things that I would call Amazon proof. That's not going to be forever, but things like Sally Beauty or things like Ulta are pretty much Amazon proof.
Right.
And so I like things like that as well.
Lots of
it's
ideas.
tough out there.
Lots of ideas, Jan. Thank you so much. Have a great weekend.
Thank you.
Jan Kniffen, J. Rogers Kniffen Worldwide Enterprises. And later in the program, our market monitor has some retail names she says are worth owning for the next 3 to 5 years.
Meantime, a down day on Wall Street. Stocks dropped sharply this afternoon, pressured by consumer companies and energy shares, which followed oil lower. The Dow Jones Industrial Average dropped 185 points to 17,535. The Nasdaq was off 19. The S&P 500 was down 17. All the major indexes were lower for the week. The Dow and the S&P 500 registered their third straight week of losses. The Nasdaq its fourth.
A closely followed gauge of inflation rose slightly last month. Producer prices, the prices businesses receive for their goods and services, increased 0.2% in April. That was a little less than expected, but it was the first increase since January. Excluding food and energy, the index was up a little less than 1%. The latest data suggests overall inflation remains tame.
Dow component Apple is making $1 billion bet in a country where it's facing some obstacles. The Dow component is investing in China's most popular ride-sharing company, a major competitor to Uber. Akiko Fujita reports tonight from Shanghai.
This is certainly a huge coup for China's largest ride-sharing company, Didi Chuxing. That investment today, $1 billion, the largest investment for this company. And with the funding in place, Apple joins the likes of Tencent and Alibaba, who've already been strategic investors in Didi Chuxing. Now, Tim Cook has framed this as an opportunity to get a better sense and to learn more about certain markets in China. This comes as Apple looks to reinvigorate sales here in China, the world's second largest market. Sales in Greater China slipped 26% in the last quarter. Apple has also been under tremendous pressure from Chinese regulators. The iBooks and iTunes movie store both shut down here in China last month. Now, speaking of Didi Chuxing, this is a company that's now valued at $25 billion. They've been locked in a very heated competition with Uber, but they are the dominant players here with 87% market share, 11 million riders a day, and they've expanded their services recently, not just to include private ride-hailing, but also buses and chauffeurs that drive cars of these users. Now, certainly investors have been speculating for some time that Apple could be entering the car business. Today's announcement, perhaps another hint of Apple's larger strategy moving forward. Tim Cook has said that he's more interested in the software aspect of it, finding ways to connect that smartphone with the infotainment in-car experience. But there's also speculation about whether Apple is in fact building out their own driverless car. And the timing of this is very interesting, considering that Tim Cook will be visiting China later this month. Akiko Fujita, Shanghai.
Still ahead, hackers strike again at the heart of the global financial system. We'll tell you what they did and what it means.
An anti-counterfeiting group has suspended Alibaba's membership. The International Anti-Counterfeiting Coalition told members that it had failed to inform the board about conflicts of interest involving an executive of the group. Member companies had recently pushed back against Alibaba's inclusion, which some view as a marketplace for fakes. Gucci America, Michael Kors, and Tiffany all recently left the coalition because of Alibaba's involvement.
Facebook CEO Mark Zuckerberg defending his company against accusations of political bias, which we told you about earlier this week. In an online post, he wrote that Facebook does not censor conservative topics and that the social media network does not permit the prioritization of one viewpoint over another. Zuckerberg also said he is conducting a full investigation and will reach out to conservative leaders to discuss the issue.
Global bank hackers strike again. They found their way into the financial messaging system, believed to be the most secure in the world. The system is used by thousands of banks to move money all over the globe. And it comes as investigators are still trying to solve the heist from the Central Bank of Bangladesh back in February. Eamon Javers is following the story for us. Eamon, it's getting more and more frightening. What are the implications for the global banking system?
Well, this is scary for banks around the world, Sue, because that international consortium that you're talking about is called SWIFT. They're based in Brussels, and they operate the electronic messaging system that thousands of banks around the world in more than 200 countries use to send messages authorizing wire transfers of large amounts of money, billions and millions of dollars at a time in some of these messages. So the fact that hackers could get into software that interacts with SWIFT and authorize transfers right out of a bank account is really scary. SWIFT saying in a statement last night that they found a second instance where this apparently has happened. They would not name the bank or say how big it was or even what continent this bank was on, but it has deep implications for the financial system, Sue.
Any other shoes to drop in this story?
Well, one of the big questions in all of this is who done it, right? We don't know who did this attack against the unnamed bank that was revealed last night, and we still don't know who was behind that $81 million heist at the New York Fed's accounts that they held for the Bank of Bangladesh. One report out today suggested that there may be a similarity between the hack at the Bank of Bangladesh and the attack on Sony that we saw that was later blamed on the North Koreans. We're going to need a lot more reporting on this to find out who was exactly behind it, but there are some tantalizing threads now out there in the public discussion.
Is there another alternative for the banks to use other than SWIFT? That's one of the questions that was floated out there. Why are we using SWIFT if they can hack into it? But almost everybody uses it. Is there an alternative?
Well, there isn't, Sue, and you're right to spotlight that. Carolyn Maloney, Congresswoman on Capitol Hill, wrote to the New York Fed asking them why they put so much stock in this particular system, and the Fed replied in answers that were revealed today. They said, in essence, everybody around the world uses this system, so we have to use it too. The global financial system is really dependent on a few electronic systems. SWIFT is just one of them.
Eamon, thank you very much. Eamon Javers in Washington.
It's an important time of the year for the media industry. Broadcasters and digital media want to get Madison Avenue to commit to buying ads for the upcoming season. And while digital has been taking ad dollars from television, the trends this year are surprising. Julia Borston explains.
Rumors of television's demise may have been exaggerated. This year's upfronts, when broadcasters pitch their new lineups, will be the first time in 5 years they secure more upfront ad dollars than the prior year. Media Dynamics projecting a 5% increase in dollars and a 10% increase in prices.
Few media can match the kind of impact, the kind of sort of sight, sound, and motion that TV delivers for an advertiser, particularly advertisers that care about their brands and care about their image. You know, it's very hard to match that kind of impact with a digital banner or a search ad.
Broadcasters are benefiting from political ads in the Olympics, but higher prices are also coming from less inventory. A number of cable networks, including Viacom and Turner, are cutting back on commercial time, and even Saturday Night Live is reducing its ad load. And now TV ads are getting more high tech. Media giants are leveraging big data to more narrowly target ads. And as traditional media companies use digital targeting, internet giants are becoming more like traditional media. At this year's Digital Newfronts, some 40 companies presenting to Madison Avenue, putting premium digital video in the spotlight. Best positioned, Facebook with its live video, Hulu's mix of originals and TV shows, and Google's YouTube, offering premium ads through Google Preferred, which sold out last year, drawing ad agency Magna Global to shift over $250 million into Google Preferred over the next 3 years.
The big news is that we are actually funding it from television budgets, which is obviously where the majority of our spend resides. So if you look at consumer usage, and we're just acknowledging that audiences are shifting out of linear television to other platforms.
As digital video draws more viewers, it's also growing its ad dollars. Digital advertising projected to hit $68 billion this year, topping TV ad spending for the first time. So while TV returns to growth, it's facing more competition than ever. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Trian Fund Management exits its stake in Pepsi, and that's where we begin tonight's market focus. According to a regulatory filing, the activist hedge fund sold its more than 18 million share stake in the snack and beverage company in March. Trian said Pepsi addressed many of the operational issues identified by the hedge fund. The news sent shares of Pepsi down more than 1.5% to 104.18. The chief financial officer at Tiffany & Company steps down. Ralph Nicoletti will resign from the luxury jewelry retailer by the end of the month to become the CFO at Newell Brands, which owns Sharpie markers and Yankee Candle, among other things. Shares fell nearly 3% to $64.43.
Automaker Honda posted an $860 million loss as currency headwinds and hefty costs related to its Takata airbag recall dragged down results. Subsequently, the company plans to recall 21 million more vehicles, in addition to the 30 million vehicles it previously recalled. Shares down more than 4% on the day to 26.28. And Acacia Communications made its stock market debut today. The telecom equipment company raised $103.5 million in its IPO. 4.5 million shares were sold at $23 apiece. The stock did rise more than 34% on the day to $30.95. And Pfizer will no longer allow its drugs to be used in lethal injections, saying its products are meant to save lives. It is the latest U.S. drug maker to impose such controls, which means the drugs used in executions are no longer legally available to authorities. Shares of Pfizer were unchanged for the day at $33.19.
Our market monitor tonight is a value investor. She likes companies she says are misunderstood by the market and names that belong in your portfolio for the long term. Joining us for the first time as our market monitor guest, she is Kim Forrest, senior equity analyst at Fort Pitt Capital. Good to see you, Kim. Welcome.
Thanks for having me.
Let's start with your stock picks, if we could, and it's retail, which just really got slammed this week. Urban Outfitters, why do you like them?
Well, they're misunderstood, like all the stocks that we're going to talk about today. They are cast as a teen retailer and mall-based, and they're not really either one of those things. About 50% of their revenues are from the teen market, but it's the older teen and college age. Mm-hmm. And then the rest is for women's clothing, and that tends to be the higher end woman shopper. But the really exciting thing is the company goes after millennials where they want to shop, which is in urban areas and next to colleges. So the company is just well positioned, and we think it's very misunderstood.
My wife loves Anthropologie, by the way. VF Corp, I don't know one child in the Northeast who does not have a North Face jacket.
Well, I'm sure there are, because this year the sales of their jackets were a little light, and that is why they're on the list. They're underperforming because everybody who made jackets underperformed this year.
It's a warm winter.
Yes, exactly. But they, again, they have this stable of brands, including Vans, Timberland, and the North Face, among others. And they are just excellent merchandisers and retailers. And they know what people want, make it, and do it in a very cost-effective way.
And now to technology. Intel made your list.
Exactly. And we think they're misunderstood because they are Intel inside in your PC. But we think they're going to move into mobile devices more and more, and cars, and everything's getting smarter. And we think Intel has the technology that will drive our smart devices.
All right, Kim, on that note, we thank you very much. We'll have you back soon. Kim Forrest with Fort Pitt Capital. And coming up, How a box marked junk became one man's secret to success. The story of how he made his millions coming up next. And here's a look at what to watch for next week. On Tuesday, more retail earnings when Home Depot reports its quarterly results. On Wednesday, the Federal Reserve releases the minutes of its last meeting. The world's largest retailer, Walmart, reports earnings on Thursday. And that's what to watch for next week.
General Motors is halting sales of nearly 60,000 SUVs. The vehicles have incorrect EPA window stickers that overstate fuel economy. The vehicles include the 2016 Chevy Traverse, GMC Acadia, and the Buick Enclave large crossovers.
A warning tonight from Subaru to its drivers: don't drive some of our cars. The automaker is recalling more than 48,000 2015 to 2017 Outback and 2016 to 2017 Legacy models. The reason? The steering may fail. Subaru says these vehicles should not be driven until they are inspected or repaired. Outback is Subaru's second best-selling vehicle.
You've seen our stories, we hope, every Jobs Friday, promising startup companies. But when do bright ideas turn into even bigger businesses? I got my hands dirty finding out how one man turned a revolutionary sponge, yes, a sponge, into a multi-million-dollar enterprise based in Fallcroft, Pennsylvania, near Philadelphia. It's part of our new series we call How I Made My Millions.
Keeping up with Aaron Krause isn't easy.
A lot of inventors are serial inventors, and that description fits you, right?
Absolutely. I've been inventing products and ideas since I was probably 10 years old.
His most successful brainchild, the perpetually happy, scrappy Scrub Daddy sponge.
This is not an overnight success by any means.
The original business was a car washing and car detailing business.
I like to tell everyone I learned everything about business in the detailing business.
All done. It was a business he started right after college back in 1993. Not exactly the career path his parents, both of them doctors, had envisioned.
I started this process of inventing all these new improvements and new types of buffing and polishing pads.
And in 2008, about 14 years after specializing in automotive foam products, 3M, having noticed the upstart competitor, offered him a deal he couldn't refuse.
We were bought out by a $28 billion a year company.
The terms of the acquisition weren't disclosed, but one of the patented products 3M definitely didn't want was this tough-as-nails sponge Krause initially designed to clean mechanics' hands.
We took the product, we made about 100 of them, we put them in a box, I labeled it junk, scrap, put it in the back of the factory, and that's where it sat from 2008 until 2011.
And what got it off the shelf?
I got to credit my wife.
So I had asked Aaron to come out here and clean the lawn furniture.
I was looking at it, I said, well, what am I going to use that's not going to scratch the paint off of this? Got those old sponges in the back of the factory. I'll finally have a use for them. I'll use them, I'll throw them out.
So he grabbed one of the rock-hard plastic scrubbers and plunged it into a bucket of warm, soapy water.
And it went, psh,
softened.
Totally soft. I said, well, what's that? Thing's ruined. Now it's not going to scrub at all. I took it out, I started scrubbing, and it worked a little bit. But as I was scrubbing, the temperature outside was changing. It was getting harder and harder.
It was at that moment he realized the foam actually changed texture. Soft in warm water, hard in cold, which made it perfect for cleaning just about anything.
I looked at it and I said, oh my God, we missed the entire boat. And then
An epiphany for a sponge that Krause is still excited to show off.
Oh, man.
Isn't that amazing?
We started giving it out to our friends and family to test.
Now it's going to be great for scrubbing all your pots.
And everybody came back with great results.
Oh, get out of my way here. I want to do this.
Not everyone was this enthusiastic at first, but a shot on QVC and a trip to the Shark Tank in 2012 quickly stirred up interest.
The retailers started calling us. Bed Bath & Beyond, Walmart, Home Depot, they all started calling us.
Until then, Krause says he'd only sold about $100,000 worth of sponges. Now he estimates total retail sales have hit $100 million.
What do mom and dad say now?
At this point, I'm the only one in my family that has patents, and I think that they're finally pretty proud.
And Krause says it would not have been possible without support from his parents. His dad let him run the car detailing business out of his garage and loaned him the money to get started, a true 5-year loan at one point above the bank's rate. Why? Because at that time, Krause was a credit risk. He paid it all back. The sponges are, if you don't have them, the sponges are really, really good. They really are. They're tough. They're tough as nails.
Why doesn't that ever happen to us? Before we go, here's another look at the day and the week on Wall Street. The Dow dropped 185 points. The Nasdaq was off 19. The S&P 500 was down 17. The major indexes were all lower for the week. And that does it for Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
Grab your scrub daddies, everybody. I'm Tyler Mathisen. Have a great weekend. We'll see you on Monday.